All right, here it goes. Hello, Matt. Welcome to our next episode of Going Live with Good Soil, and welcome to everyone on our YouTube live channel and Twitter Spaces. Just a disclosure for those of you who could not see it visually, none of this is financial advice. This is all just our opinions about stocks and the markets, and we'll just go from there. So Matt, yeah, today, Tuesday, first day of the week after a 3-day holiday weekend, and we start the week off another big day for growth and tech stocks, getting hit hard. New 52-week lows for ARK Investments flagship fund. All the stocks that we play in, and most of the listeners and followers of ours are interested in, are getting hit hard today, right? It seems like correlated to the 10-year, rates and such. What are your thoughts, Matt?
Yeah, I mean, this has been the concern that's been in the market for a while now. You're seeing the 10-year Treasury yield now at 1.85%, which is the highest it's been in a couple of years now. Actually, wasn't really this high since going back to late 2019. It was kind of at these levels. And then it had been much lower than that for the last 2 years, which obviously really helped the growth names during that huge rally we saw in 2020. So I think now you're seeing the reverse of that, and the question that I think is on everyone's mind right now is do yields stop at say 2%, 2.25%, somewhere in that neighborhood, or do they rise more substantially? And there's meaningful price risk to growth stocks in particular if that 10-year does continue to rise higher than say 3% or so. So that's, I think, that the big question everyone's trying to figure out. I saw a really interesting tweet this morning that I retweeted from a Wall Street Journal reporter, which there was a survey among institutional money managers basically saying, what are you doing with your funds? And the like which names are you invested in, or like which sectors of the market are you invested in? And investment in growth stocks among professional money managers, at least according to this survey, was at the lowest level seen since December of 2008. Kind of like right in the middle of the trough of the market there. Yet the perception among those same managers was that growth stocks, or tech stocks technically was the way that it was phrased in the survey, but that tech stocks were the most kind of overplayed investment thesis right now. So there's this huge disconnect, it seems to me, in the perception of growth stocks being kind of overvalued and overbought in the market. Whereas in reality, if you're looking at the metrics, a little bit more objectively and what people are actually doing, they're actually under allocated right now relative to historical levels. So that gives me some confidence. I also think it's going to be hard for Treasury yields to go to even 3%, but certainly much higher than that. I think it'd be unsustainable, just because you've got debt service would really get out of control. The federal spending on just annual debt service would get really out of hand.
Yeah.
If you had 10-year rates of 10% or 3% or more. So
yeah,
I don't know.
We know there's a ceiling. It can't get much higher, right? It can't go to like 5% plus. We know that's almost in my mind, that's almost like a fact. I mean, I guess anything can happen, but we don't believe there's any chance of getting close to that even, right?
Yeah, I don't think so. I mean, it certainly could. I mean, the one argument could be that they just print even more money if that happens. But if that were to be the case, then inflation, that would create more inflationary pressure. So I think the most likely outcome, kind of far and away, is that yields stall out somewhere maybe around 2.25%, something like that. But we'll see. What do you have any other thoughts on kind of all these concerns and how the market's reacting to it? What's your take right now after seeing this for about a month and a half?
Yeah, I keep thinking we're closer and closer to the worst of it, and so I keep thinking that, and then I'm surprised the next week or the next few days when the stock market goes down even further. But I really think we're close, to. I really think that earnings. I've been waiting. I almost was like tweeting out over the last week, like I can't wait for earnings, because I can't wait for the big tech company earnings to blow out, like
Right.
do well. And I feel like that's the real backstop to fundamentals that, institutional money will realize, like, hey, these stocks are actually really cheap right now based on these earnings and the projections. And there'll be kind of a wave of buying into some of these discounted prices of a lot of the best tech stocks that are growing super fast and very successful. Of course, there will be a lot of, story stocks, quote unquote, that'll still suffer and languish, like a lot of the SPACs that we're familiar with, or, EV pretender stocks, stuff like that are still kind of story mode stocks. Those stocks I don't think do recover. But I think the stocks that are actually businesses that are growing fast, even if they're not generating profit, maybe they're sinking all the revenue into growing faster, but they're growing. I think the earnings will help, show that, illustrate that for institutional money to get comfortable maybe in reinvesting in those companies at these kind of really discounted prices. So, I do think that there is a turnaround, and I'm hoping that it's this earnings season over the next, 2 to 3 or 4 weeks. I was just looking at like Zoom, for example. I mean, ARK Investment's been pounding the table on Zoom lately. I feel like
Yeah, they
Zoom is
have
a
been.
big
They've been
stock to
very,
buy it.
very
Yeah.
vocal.
It's been hit so hard. That's like an example of one of these tech stocks that's been hit so hard, but it's actual business that's growing with profits and revenues. It's actually really growing fast and relative to, a lot of other stocks. And so I think that's like an example. Like that stock's not even hit. It's actually flat. It's up a tiny, tiny bit as we're talking right now. So maybe we're seeing kind of the bottom of some of these, like Tesla, for example, another one of these stocks like we follow, we're going to talk about in a minute, but it's growing. It's actually got profits now and that are growing fast. So I feel like a lot of the tech stocks that are actually, businesses with actual revenues that are growing, very fast are kind of, maybe we're at the lows right now. I'm hoping.
Mhm.
So we'll see. That's my kind of speculation. And we'll see in the next week or two as earnings play out what happens.
Yeah, it's as I reflect on the last, month and a half, there hasn't really been any news out of any of these companies because obviously they're closing the books for 2021 for Q4.
Yep.
There's this silent period that management can't really make any commentary. But just next week, we're going to really kick off earnings season for these companies, and that's when all the kind of noise of the last, call it 8 weeks, 7-8 weeks. We'll kind of have a more meaningful movement, I think, after that, because you're right. I mean, operations matter, the actual fundamentals of companies matter. And so we're going to see, despite all the concerns of kind of macro factors, how these companies have performed in Q4 and kind of what the commentary is going forward. And I do suspect that, that's going to be a bullish signal for the markets in general.
Yeah. Yeah.
So I really can't wait for earnings season.
Yeah, I can't wait. I wish we could just like snap our fingers and be like 3 weeks of earnings and we'll see what the market's doing from there versus now. But also, I think, isn't it on the 25th? Isn't January 25th the next Fed meeting, I think, if I recall? And that's about a week away now. And so maybe that data point, whatever comes out of that, will be kind of provide more certainty to the markets for, medium to longer term interest rates at this point, so that portfolio managers can put their money back to work once they have more certainty on how far rates are changing. So someone just chatted January 26th. Okay. Yeah. That's about a week away, next Wednesday. So yeah, we'll see what happens with that. That's actually Tesla's earnings day too. So a lot of interesting things going on. So speaking of Tesla, the product roadmap update that Elon is going to be on this call for, I mean, it's not a reveal of any, there's no demonstration that I'm aware of going on, right? There's no like invite for an event to attend or watch on YouTube, just an earnings call, but Elon's going to participate on the earnings call. So that kind of, I don't know. What do you think about that, Matt? What are your thoughts on this product roadmap update he's saying he's going to be on the call for?
Yeah, it's curious. So, yeah, I'm kind of two minds about it. On the one hand, it is an earnings call, like you said. So I don't think he's going to reveal in any sort of meaningful way, like the $25,000 car or like whatever the next product will be. But I do think there's going to be meaningful announcements about kind of the developments of Berlin and Austin. They've been so quiet about those, and there's been the kind of rumors, and Elon actually confirmed that he's going to Berlin in February. So, I think it's going to be a little bit more high level in nature. I suspect there's going to be a decent amount of discussion around full self driving in that rollout. He's even talked about rolling that out to Canada in a couple weeks.
Mhm.
So, I think it's the time seems about right to kind of give an update on how that's um, rolling out more broadly. I wouldn't be surprised if we see some incremental recognition this quarter on those full self-driving revenues, just as they are rolling it out to a wider geographic area. So
Mm.
I don't know. I suspect there's something else that
Yeah.
because it doesn't seem like incremental disclosures around full self-driving or anything like that kind of warrants Elon being on there to discuss. So I don't really have any guesses other than it seems like there's going to be something, but
Yeah.
I can't really put my finger on it. What do you have any thoughts on what it could be?
Yeah. I mean, I'm thinking it has to do with the full self-driving, like the single stack coming, maybe the update for, where they have the vision only
Hmm.
for highway and non-highway driving, and it's just all one stack, I guess. And maybe that's just a real big change in Tesla's foundation of building the full self-driving uh, architecture from here going forward, and the nines they're going to get to, obviously, of accuracy and such. But I'm also thinking it could be more of a product, like a physical product update, like maybe the 4680s. Like we've
Hmm.
seen pictures of I think Joe Tegmeyer, the Twitter guy who posts drone videos of Texas, the Giga, Austin
Hmm.
factory, and you've seen the 4680 line set up there. You got to think they've made a lot of progress at Cato Road, that facility, right?
Right.
And you got to think they're already planning to put it in the Giga Berlin factory at some point. I know there's lots of talk about when they'll do batteries there, but this 4680 line, this is the biggest deal. They had a battery day all about this, right? So
Right.
I feel like this could be an update on that primarily. Like the 4680 is coming to fruition, like we said, and we're already going live with X amount of yield so far per week with our Cato Road facility, and we expect to multiply that by X amount with Texas Giga, Austin, and then Berlin and Shanghai later on. So I don't know. I wonder if there's something there, because fundamentally that's like the biggest thing, so they can build more product. They can't
Hmm.
really, they don't want to launch the Semi or more products really until they can ramp up battery supply. And the mega packs are a big thing now, so they probably need as many batteries as they can for that as well. And that might not be the 4680s, but maybe all the other batteries they would otherwise use for cars now could go to the mega packs, and they could focus on the 4680s for cars and trucks or something. So what do you think about the 4680? You think
Yeah.
that's a likely
I,
candidate?
I think that could be. I've been wondering for a while, what are they doing with all those batteries that they've made out of Cato Road? I mean, 10 gigawatt hours of capacity is a lot.
Yeah.
And, now
Yeah.
obviously they weren't running at like a full 10 gigawatt hours for all of last year, but you'd have to imagine there's a somewhat meaningful kind of store of these 4680s that they've built kind of during this pilot process. And so I'm wondering, are they going to start building the new Model Ys with the 4680 right off the gate in
Mm.
Austin? I suspect not. I think it's probably more complicated than I'm making it seem.
Mhm.
But I don't know. I mean, I haven't been able to figure out what they would do with those cells, other than maybe like they could be going in um, the Tesla semis. I know they're doing like a small
Yeah.
delivery of some of those semis this quarter, I think. So maybe they're going to some of those types of applications. But I, to me, it seems kind of strange that they'd be building a whole kind of assembly line for with the old battery technology, and then in a couple months or a couple quarters, kind of transitioning everything over to 4680.
Yeah.
So I don't know. It could be 4680, and that would be huge news if they were successful in kind of like launching off the bat out of Austin with
Yeah.
that production. That'd be huge news.
That'd be huge. It'd be huge for us, like all of us. But I don't know if institutional Wall Street would really get it. They didn't need to see the
No,
yield in a couple quarters. It'd be like battery
no,
day.
they
Like we were
wouldn't.
all excited, and the stock tanked 10% right after. So yeah, we'll see. I mean, there's not a lot of hype going into the Tesla Elon. I mean, I think you and I and some of our people that follow us are kind of excited about Elon being on this call. But other than that, there's not a lot of I don't think hyped by, mainstream media or, of this being like a special day, like Battery Day. It's just another earnings call that Elon's happening to participate on, basically. So that's good. Yeah, it's
Yeah,
no
but
like,
at the same time, like those events, which are over the long term really impactful to the stock, as it talks about the strategic direction of the firm and that sort of thing. The market has historically underreacted to those, but we're also expecting, at least you and I are, a pretty decent earnings beat. So that could move the stock, even if the market doesn't know how to digest like 4680 news. I do think the fundamentals continue to surprise. And so if they were to, post something close to $3 per share in earnings, like we've been estimating, and announce that they're, launching out of Austin with the 4680, some sort of assembly line there, that would give me a lot more confidence on margins for 2022. It may not move the needle on, how Wall Street thinks about things right now, but that would certainly give a lot more, I guess, cover to their financial performance this year.
A couple other product roadmap dark horse theories are, speaking of the factories, maybe he announces that Giga Texas and Giga Berlin are coming online, and they're product in themselves, and they're willing to, build this type of product for other, manufacturers who want to gain access to Tesla's expertise in manufacturing or something. I don't know. That's just wild speculation. I know in the distant past he talked about the Gigafactory being like Alien Dreadnought, 2.0 being like a product in itself almost. So, and manufacturing, him being like very prideful on Tesla's manufacturing capabilities and such. Another kind of speculative thought I had was maybe they open up some kind of app store, and he announces some kind of like software app store for the Teslas, gaming and other types of apps that can be in your car, that third parties put together and put on all the Teslas. We've talked about like Zillow having an app, for example, or all kinds of games, or, there's lots of things you could have in that big screen, that touch screen, that if you opened it up to third party app developers, it could really go wild with content and cool stuff. So that's another wild dark horse idea. I'm not sure about that. And then also another is that maybe they're really moving faster on the bot, prototype than we thought. I mean, they announced it back in August, 5 months ago, not even 6 months ago, but maybe they'll launch like the prototype or something for the Tesla bot already. But I don't think that is too early for that. Those are some other crazy dark horse ideas. And then the Tesla Semi, obviously, and Roadster, which we haven't heard about in a long time. But I don't know if you remember, this Semi and the Roadster were both unveiled on the same event like 3 or 4 years ago. And we haven't heard anything about the Roadster and in a while. And the Semi, obviously, Pepsi's supposed to be getting their first delivery soon. So maybe there's something there. But I don't know if that's big enough in itself, the Tesla Semi, like first deliveries, for him to be on the call just to talk about, hey, we're doing our first 10 deliveries for Tesla Semi this month or something. I don't know. So there's a lot of interesting ideas. Maybe something we haven't heard of. I don't know.
Yeah. Roadster, last time I remember Elon talking about the Roadster, he was basically saying, it would really make sense for them to prioritize Cybertruck over the Roadster. So I do think that's more unlikely, but the whole idea of kind of licensing their technology or their manufacturing to other car makers is really exciting, because that would drastically move the needle, I think, on margins, and Wall Street would react to that right away if there were some announcement around there. A year ago I probably would have said it's really unlikely, but now Elon's talked about even opening up the supercharger network to other manufacturers, which is a pretty big deal. And you can imagine if they're having impactful kind of conversations around there, which presumably would have to include some sort of cost sharing payments going to Tesla in order to allow other users to access that really valuable infrastructure. It would be natural at least to have the conversation about Tesla doing some manufacturing for other companies, given how much of a technological lead they have, how profitable they are at doing it. Compared to all the other OEMs out there who are just struggling so mightily right now with trying to manufacture EVs and all the supply component shortages and everything like that. Like, Tesla just very much appears to have some secret sauce here. And if they announce some sort of, like partnership with Honda to make EVs or something like that. Like
Yeah.
I could imagine that would be huge news that would, you know, really move the stock.
Yeah. 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 Yeah, it would be huge. It's so hard though, I feel like for remember how hard it was for Tesla to work with Panasonic? Those are two
Yeah.
big companies to manufacture batteries in Giga Nevada. It was so slow and painstaking, two different cultures, two different big businesses, and just lots of red tape to cut through, and just who's too many chefs in the kitchen probably. So from a big idea point of view, it sounds really cool, really good, but unless they sold this product in some kind of clever way where Tesla's had full control and Toyota or Honda are just paying Tesla to build it for them, or I don't know, depends if they're trying to like join forces to build a factory. That's going to be hard to do, I think.
Yeah, I don't think that would have to be like a contract manufacturing kind of basis where,
Yeah.
you know, Tesla
Yeah.
provides the skateboard and maybe the motors, and
Yeah, something like
you
that.
can build like a Hummer on top of it or something like that. Like to me, that's the
Yeah.
only way Tesla would kind of consider something like this, because
Yeah.
you don't want to be slowed down by all the different design engineers talking about just like like the Cadillac brand design signatures that we'd really like to incorporate here.
Yeah.
And they're like, no, we don't have
Yeah.
time for that. Like, we gotta go.
Yeah, just imagine all the meetings of meetings and meeting.
Oh,
And Elon hates
yeah.
meeting, and most people, meetings are just not productive use of time usually. So,
Yeah.
Anyway, so those are interesting ideas. I mean, obviously, the Cybertruck. There's all this news lately of the Cybertruck, and there's new features. Elon had mentioned or confirmed that there is like new features to the Cybertruck that will be on the production version. He hasn't revealed them yet. Maybe there'll be some kind of update on the Cybertruck. Wouldn't it be cool if the Cybertruck's going to be produced and starting to be delivered in the next few months from Giga Austin? That'd be pretty incredible.
I'm highly skeptical that that's the case, but yeah, that would be a huge surprise.
That would be a huge surprise. Yeah.
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 And, I forget where this data point came from, but somewhere recently there was the news that the 3 motor variant is going to be removed, and there'll be this new kind of 4 motor variant which can do the tank turn that apparently the Rivian is supposed to do as well. So that's kind of an interesting thought. I mean, because even the Plaid only has 3 motors right now, so to think that there could be a 4 motor Cybertruck is kind of crazy.
Yeah. That'd be cool. I think that would be neat. The motors, I just want 1 or 2 motors, but it'll be cool to have more motors. I mean, maybe give me a Cybertruck with 10 motors. I'll take it, whatever.
10 motors.
Give me the 10 motors, 10 wheels, all kinds of cool stuff. I'll take it. Maybe there's some cool advantage on Mars with it, or I don't know. But I just want the Cybertruck. I just want it,
Yeah.
They're gonna make it better, I'm sure. And you get bragging rights to more motors, and there's cooler things, I'm sure, and whatever.
I do think they're going to need some sort of like oversized pack for some variant of it, because if you're going to be doing towing, you don't want to be like towing some huge boat or something like that, but then have to have only a 100-mile range because your range is so diminished because you're towing. So that's kind of like the Achilles heel of pretty much every EV out there right now. Like the range when you're towing is just really diminished. So I think if they can solve that, which it seems like they can, I think some folks even got pictures of the screen on that Cybertruck that was revealed at the event, and it showed a 600-mile range. So you can imagine if they're trying to come up with a range like that for the Roadster, anyways. Obviously they're thinking about 4680. You could imagine that there's, I don't know, some 150 kilowatt hour variant that they could do, or something more than that, even with really high energy density that could get, I don't know, 600 miles of range, or like 400 miles of range when towing, or something like that. And that could be a really meaningful competitive advantage for that segment of the population who actually uses it as a work truck.
Yeah, I agree. So we'll see. Yeah, that's just over a week away. It's 8 days away. Wow, it's coming up fast. We're gonna have to get we got to brainstorm a good question or two to throw out there on stay.com, because any minute now that'll probably open up, and you got to put a question out there just in case it gets voted up. We'll see. But there's a lot of good questions to ask. We just got to put our brains together to think which one we want asked most, and we'll see all the other people asking questions and vote those up, the ones that we like.
Yeah, I've been gunning for a Tesla Energy Day. I think they've been so quiet around that whole side of the business, and it seems like the time is ripe too to maybe make some disclosures around that. So I'd be surprised if there isn't some talk about that. That even just the scale of this, 40 gigawatt hour, kind of dedicated mega pack plant. I mean, that's a huge amount of batteries, and it seems like that's worth talking about more than they have so far.
It is. And with the energy, kind of what I think, it connects to me with the mining of crypto and Dogecoin. And they recently made that kind of update on Dogecoin, selling products in terms of Dogecoin instead of dollars on their website. You saw that, right? So there's an outside possibility that this product roadmap has something to do with, Tesla's, integration with mining or Dogecoin. I don't know. Well, that'd be interesting. What if he's like, we're pricing all of our cars going forward in Dogecoin, and you can buy it in dollars, but the pricing is in Dogecoin. I wonder if like Elon would do that. Like you still sell the products in dollars, but people will have to do the calculation to say, oh, how much money is that? That says 88,000 Dogecoin. How many dollars? And they have to do the calculation. If that's just put it in the front of people's mind, it makes Dogecoin forces Dogecoin to be more of a stable currency as well. And maybe Elon has enough money to kind of float into Dogecoin to keep it somewhat stable, at least. I don't know. It's just some ideas there, but we'll see.
Yeah, we speculated a while ago that some sort of new version of the Powerwall could include crypto mining. And this makes all the more sense when you're seeing some of the pressure that utilities and, well, in this case, grid operators, the California Public Utilities Commission, the utility regulator in California, is proposing pretty drastic changes to net metering, which would really hurt your economics as a solar owner. But if you can get to the point where you don't need to export back to the grid, and you can essentially be an energy island by having oversized solar generation, a decent amount of storage to cover you for backup, and then any excess production that you have, you can put to economic use of, say, mining Dogecoin, that has an economic footprint that's more beneficial than simply selling back, even at the net metering rate, which is beneficial. Then that would go a long way in my mind to kind of increasing solar adoption, and kind of grid resilience even, and kind of isolating from some of these protectionist policies, which I think do make sense, but certainly aggravate residential customers. So I would be thrilled if they announce something of that nature, but I know for sure the market would not understand how to digest it. So I wouldn't expect that to move the stock at all. It would probably have a negative reaction.
Probably. And we haven't even touched on like Tesla insurance or solar. I mean, we've touched on a lot of different facets of Tesla's, conglomerate of businesses, and there's so much to talk about in each one. Like it is just an example of why there's no kind of buy side or sell side analysts that can really easily understand all of Tesla. There's just so many different ways to expand that they likely will expand over time, and business streams and revenues and profit streams. It's just a fascinating story to watch unfold before all of us, as this decade goes on, how massive Tesla is going to grow to become. Like every earnings call, every battery day or AI day is really a huge benchmark in history, in my mind, of what's unfolding right before our eyes of the greatest company in the world kind of coming about. So it's super exciting. Every time we hit one of these new little milestones with, now this being not just a regular earnings call, but an earnings call with Elon giving a product roadmap update, so I'm super excited. Every time this happens, it's like Christmas to me. It's like Christmas Eve to me. I mean, the stock might not react so well, I don't know, but I'm so excited just to find out the new news that he's going to deliver about like cool new technologies they're getting closer to delivering and such. So, we'll have to see. So in terms of earnings season, the other stocks that we follow and talk about, we just released an interview on Lemonade. I guess we're paying attention to that. Stock's down again today, along with all the growth stocks. Right now, it's at like a $2 billion market cap right now, $33.44. Unbelievable. I mean,
they got 1.1 billion in cash and 2 billion of market cap. That's kind of crazy.
Yeah, that thing was a 10 billion market cap not too long ago. I mean, they raised money at around a 10 billion market cap. Now they're a 2 billion market cap. And I would argue their underlying businesses grown or gotten better. I mean, they're not making money still, but they're growing, So, this is a good example of these tech growth stocks really getting repriced. And, at some point, someone's going to see the value, I would think, in the growth. And I mean, their earnings. Let me look up their earnings. What are you going to be watching for in their earnings, Matt, if anything?
Yeah, so for Lemonade, we've been diving into them a lot lately, and a lot of the criticism that I've seen out there is around things like the quarterly loss ratio, or the marketing spend, which was a comment Dave Lee made, or
Mm-hmm.
customer churn, which is some good analysis that Paper Bag Investor focused on around there. In my mind, at this stage of the company's growth, the thing that matters more than anything is like customer growth rate. So if you look at the average, revenue per customer they have right now, it's only about $140.
Mm-hmm.
And so if the bull thesis is right, that number will certainly grow by many multiples over time, as you have people buying renters and home insurance today who transition into like automotive insurance or home insurance down the road, which are 10 times more premium per year.
Mm-hmm.
Um, so that's kind of the long term investment thesis. But right now, the most important thing is kind of getting those new customers today, who 5 years from now will turn into those more valuable customers. So in my mind, the most important thing right now is not like loss ratio or marketing spend or whatever. It's how many customers are you growing by this year. So that's what I'm going to be most focused on for Q4, and probably for the next year at least.
Yeah,
Until we
and
can
that
see that kind of revenue per customer increase.
and that's a little tricky sometimes because their customers, like you said, they have multiple policies. Sometimes many of them are crossing over. I think they put out some stats in the last earnings about that, but they're seeing more like renters insurance people getting into life insurance and pet insurance too, for example. But that counts as one customer, not three customers. So
Mhm.
we have to kind of draw that out from the stats they put out to kind of be careful, because their customer growth will show something that's in my mind less than what it should show. Like, I almost think every policy they sell should be almost like a new customer, even if it's the same
Right.
person or same family, but they don't count it that way. So yeah, you have to kind of look at it carefully. And the auto insurance is what we talked a lot about with Paper Bag Investor on that interview we just put out on our YouTube channel. And auto insurance is really going to make or break them in the medium to long term. And it's still early days of that. It might be another 1 or 2 quarters before they kind of close that Metro Mile acquisition, where they can really
Yeah.
license it to all 50 states. But they've started with Illinois and like one other state, I think. And so they're getting some early feedback and iterating on their process, I'm sure. And so it might take a few quarters to really play out, but yeah, this quarter will be a data point to keep an eye on for sure. Some other stocks that we talk about, Rocket Lab, for example, their earnings probably in February, I would imagine. Lemonade's earnings, I think, is probably late February. They haven't announced a date, but it seems to be a little towards the end of the earnings season. Rocket Lab probably sometime in February as well. They haven't announced a date yet, but I guess their earnings report. What are we thinking to look for? What's something key to look out for?
Yeah, yeah. Couple different things. One will be kind of more continued commentary on this acquisition spree that they've been on. I mean, it's all kind of on this goal of becoming more vertically integrated. But they've announced something like 3 acquisitions in the last couple months.
Yeah,
For various kind of component manufacturers, and there's like a solar supplier they acquired. So kind of more of the integration plans for those would be good to hear. But I think the from a like 2022 standpoint, the thing that's going to be really important to keep an eye on is how New Zealand unlocks, or if they do at all, because it has impacted their launch cadence this year.
yeah,
Just the fact that they haven't been able to, like, Peter Beck hasn't left the country in like 2 years, I think. So
yeah,
they're building out this whole new launch facility in North Carolina that he hasn't even visited yet.
yeah,
So it'll be really good if we can get some kind of news on how those lockdowns are progressing in New Zealand, and what their view is for getting customers to New Zealand, but also kind of freeing up travel just for Peter to and the rest of the team to get to the States and talk to customers and that sort of thing.
yeah,
So that's what I'm
yeah,
looking for. Right? What about
yeah.
you?
Yeah, I mean, Rocket Lab is kind of one of those. That's like our stock. It's almost a combination of like a story stock in the space industry. You know, the space industry is like an entire story in itself in a way, but within the space industry story, we view Rocket Lab as one of the actual producers. One of the, not just a story within a story. It's actually producing and growing with launch cadences more this year, and they're going to have, they're actually sending things to low Earth orbit like SpaceX. And there's no one else doing that. People talk about doing it, but no one's doing it. So, we like Rocket Lab because it's actually doing, the business or the service that is required for a space services industry or space industry to grow. And, but the bigger story of the space industry, that comes and goes. Last year it was hot for a while, and now it's kind of cooled off. And I think it'll get hot again as Rocket Lab kind of is able to make more launches with more service provider, provide more space services and show, revenues growing, year over year. Quarter over quarter, it's going to be very lumpy, especially with the new way they calculate their revenue from launches. But, when you look year over year, I think it'll show strong growth. And so it might take a few years to play out, but we believe strongly that over a few years, it should be valued much higher than where it is right now at around a 5 billion market cap. It should be significantly higher for the place it has within the space industry. That's sort of our thesis. So yeah, this quarter, I'm not too concerned about this quarterly report. I'm not sure, I'm a big, I'm looking for in between the lines what the longer term picture is in the next few quarters for Rocket Lab. Any kind of, signal they can talk about with a constellation satellite service they want to put together or something, anything you can see that shows like, hey, they're really long term in their business and with some really good long term plans. That's what I'm looking forward to seeing in their earnings.
There is a pretty stark contrast with Rocket Lab compared to, say, Tesla, where Tesla's financial performance can absolutely move the needle quarter to quarter. The same is not really true for Rocket Lab. It really is a longer term play.
Yeah. And then Roblox, that's the last. We'll go into Q&A in a minute. We'll just talk briefly about Roblox and then just take a bunch of Q&A on stuff. But Roblox, the thing we're really looking close to, I mean, the big news today, I think that affects Roblox and is keeping it from going down with the rest of the NASDAQ is the acquisition. I mean, it's come down about 1.5% now, but it was up in the morning and it's not down nearly as much as it otherwise would have been, I guess, if Microsoft wasn't buying Activision. I feel like that big acquisition helped kind of keep Roblox positive most of the day.
Roblox was up like $5 pre-market, in the back of that news, and it was every other growth stock was down. So the gaming stocks clearly seem to benefit from this acquisition announcement by Microsoft. Which is kind of curious because Microsoft acquiring another company doesn't really move the needle in any meaningful way for Roblox. It's more of a kind of market sentiment, like, oh, gaming must be hot. Like, let's buy more gaming stocks.
But maybe someone will buy Roblox for 50 billion or 60 billion. Yeah.
Roblox has been on this crazy, swing the last couple of months, though. They had such a great Q3 report. The stock was at all-time highs, and then the November, daily active users showed a very small decrease. It was like a 2% sequential decrease in DAUs, and the market like freaked out. It's like, oh my gosh, like Roblox is losing users. Like the stock dropped. I forget what it was, but it was something like $50. The stock dropped $40-50. Just like a crazy movement on like a 2% change in the underlying fundamentals. So to me, if they post a really strong Q4 and the December user metrics, which December is historically a really great month when kids are home on Christmas break playing a lot of Roblox. You anecdotally were telling about your own kids blowing through gift cards over the holidays, right?
Oh yeah, tons of anecdotal stories of that, and I think that'll be a big December bookings number. We'll see. But
you can imagine if December rebounds quite significantly relative to where November was, that whole story can really accelerate. So it wouldn't surprise me if Roblox is kind of the biggest mover after earnings, just because it's been so seemingly sensitive to very small changes in kind of the underlying metrics that they're reporting kind of month to month and quarter to quarter.
I would agree. I think I'm excited for Roblox. I think that might be the first week of February is the estimated earnings date. So yeah, we'll find out in a few weeks. But yeah, I'm Roblox. It's growing super fast, and yeah, if what we talked about in the beginning with the macro markets, if earnings can kind of help put a foundation on some of these stocks that are growing super fast with actual businesses, and create confidence for institutional portfolio managers to put their money back into some of these businesses, I think Roblox would be near the top of a lot of people's list, especially anything regarding the metaverse. Even though we talk
Mhm.
about the metaverse being like an overly used term, Roblox, whatever the metaverse is, Roblox is a piece of it. It feels like no matter what at this point. So um, anyway, all right, let's go on to some Q&A. I guess we got about 20 minutes for Q&A, and maybe Alec will queue up some questions. From Alex B, do you hedge macro risks in 2022 somehow in your portfolios, especially for long Tesla position? We've talked about it. Matt and I have in the past, and among our fund, and we actually talked to our accounting firm and such about what might trigger wash sales or not if we're going to buy Tesla puts or whatever at some points. And we just decided overall, like there's no easy way to hedge Tesla directly. The puts are so expensive. Plus, it could trigger wash sales if you're holding things for long-term gains and you're close to that 1 year mark, for example, or could reset the holding period. Or there's just kind of complications, and it's just so expensive buying Tesla puts right now. And we haven't hedged Tesla, and our whole portfolio overall. We think about it from time to time hedging, but it's just so difficult to time the hedge. Like, are we near the end of a correction or downward move right now in growth and tech stocks, or are we in the middle of it? Who knows, right? And so if you're in the middle of it, you could still hedge it right now and probably do okay hedging it. But if you're at the end of it and you try to hedge it, you're just hurting your downside even more, because now you just lost all the cost it was to hedge your portfolio, and the markets are coming back up or whatever. So it's tricky hedging, like unless we feel like there's some imminent like threat to the macro market that's going to push it all down much further. It's hard to really pull the trigger on a good hedge for the tech and growth stocks, since the hedges are typically expensive.
Yeah, we found, we did spend a lot of time exploring this, and you're either tying up a lot of capital, or you're getting an imperfect hedge, or you're creating a tax liability. So we've been open to it. We actually explored it in late November, and in retrospect, sure, it would have been great to pull the trigger on that, on a hedge like that at that time. But there's not a great way to do it, without kind of either giving up a huge amount of upside, or paying a huge premium, or having tax issues. So we remain open to it. We did do a kind of a macro hedge last year, which didn't really pan out, but we're open to it. Just haven't found the right mechanism to do it right now. And honestly, right now, I think our view is this is the time to be buying, given the fact that we've already come down so far. The fundamentals look so strong right now. This to me seems like the time to be buying, not hedging.
Yeah. One type of hedge we've thought about that we might employ is, there's a few stocks out there that we would like to short, and we have experimented in shorting certain stocks from time to time. Sometimes it's worked out well. Sometimes we've been on the wrong end at the wrong time, and covered. But I think there's a number of stocks on our radar that we'd love to short. And next time the market kind of goes up, we might pull the trigger on shorting some of these stocks again, or for the first time. And so that's kind of a natural hedge for when the whole macro market goes down next time.
Mm-hmm.
From Alex Johns, what are your thoughts on Hood? I mean, I've expressed my thoughts a number of times on Twitter. I am not a fan of Robinhood's valuation. I mean, I think the company does a great service to the public, getting more retail investors involved in the market. That's for sure. But even right now, to 12 billion market cap, that seems really high to me. I mean, when they were at 30 billion or 40 billion market cap, I was like, that's insane. I think we didn't disclose, but we did short it for a little while and made some money, but the borrow fee was like ridiculous. It was like 140% at the time we shorted it. And so after a little while, we're like, this is expensive to borrow. We made a little money. Let's just close it, because it was like so much money just to borrow the shares to short it. So, I am not a fan of the Robinhood valuation. I don't think they have anything special that is not going to be commoditized or isn't being commoditized already with regards to getting a nice looking app for people to use to access stock markets and crypto. So I don't know. What do you think, Matt? Their balance sheet is terrible. Robinhood's balance sheet is terrible. Look at that, right? I mean, their margins are low. Their customer growth. I mean, they were in trouble after last quarterly earnings. They're going to be in trouble again after this quarterly. I mean, their growth is not going to sustain their market cap valuation. I don't know. Sorry, I'm passionate about not being
no,
favorable.
I agree with you. Like I've always just been kind of skeptical of them. Like that the Vlad, the CEO, just seems incredibly untrustworthy. From the couple times I've seen him, like he's not a kind of jockey I want to bet on leading a company. And then like you posted this great kind of comparison of their metrics to Interactive Brokers a while ago, and like comparing their valuations, it just seems crazy. But like ARK Invest is really bullish, so I tried to listen to them. They talked about them on a call last week, I think it was, where they kind of answered a question about why they've been buying so much Robinhood lately. And the answer that one of the analysts gave was almost nonsensical to my point of view. I mean, he was basically just saying like, oh, like it's a great like entry point for young investors, and they're doing a lot with like education, and like they're really bullish on cryptocurrency. And I was like, those are just like random facts. So that's not like a cohesive investment thesis. So I tried to listen with an open mind, but I came away more convinced that there's not a real credible kind of investment thesis other than like just hodl, and eventually all the like these small time investors will become big time investors. Like to me, that's their best hope, is that
but even the big time investors, that's the problem with Robinhood. Even the small time investors that make it to the big time or the big leagues, let's say, a large percentage, if not the vast majority, will switch from Robinhood to somewhere
100%.
more secure and more cost effective. Interactive Brokers is a perfect answer, except their user interface is terrible, let's say. But there's others out there that have a nice user interface that are more secure, more cost effective than Robinhood, even. And when it comes to payment for order flow, I was disappointed in ARK Investment. I think Nitin Jain, I think was her name. She posted some stuff or a video about Robinhood and payment for order flow and Interactive Brokers and payment. And I was like, what? You're comparing apples to oranges completely here. Like, and I think I questioned her, and she wrote some questions, and I just didn't want to get into it. But like, to my mind, fintech is complex in some ways, in that like payment for order flow is not a simple thing to dive into, like the whole payment for order flow business model. And I think people look at it, and sometimes in a 5-minute crash course, they think they understand it or whatnot. But I don't even understand it. I've worked in the industry for 10 or 15 years, and it's so complicated. I understand parts of it, but there's so much I still don't understand. But I do know that Robinhood really screws their customers big time on payment for order flow. And this is just that this comes out in time, and it creates a lot of cost, embedded cost. It's like sneaky costs. It's not transparent, And so the customers, you put the same order in Robinhood at the same time with Interactive Brokers or somewhere else that's not selling your order flow, then you're going to see a major difference in your execution prices and such. So, I just wasn't happy with ARK Invest's analysis of Robinhood either, in terms of payment for order flow, for example. The service is great. Like, it's a good story to the general public. I agree. Like, Robinhood has brought a number of retail investors that otherwise would not be exposed probably to the equity markets, are now exposed to the equity markets. That's a great service to the country. Yeah. So, and I like that, but you can't buy a stock because of that story, and that's where the disconnect is in my mind.
Anyway. Yeah, absolutely.
Good question. Yeah. Age A. How do you guys feel about Troy's delivery estimate of 1.64 million for 2022? He's usually low by beginning of the year by 15%. So if same thing repeats, we're looking at 1.9 million for 2022, quite likely. So I'm not sure about, he's usually low by beginning of the year, 15%. I think Troy posted something like his last few annual delivery estimates on January 21st or whatever, and they've been off by like 6 or 9%, not 15%. So I'm not sure where that's coming from. So if it's 6 or 9%, you just have to look at Troy's recent tweets, and I think he brings it up, or maybe in his Patreon email. But yeah, 10% would be 1.8 to 1.4 million, let's say, that range. That seems about right to me. 1.4 1.8 million cars for 2022. I mean, I'd be really surprised if they get to 2 million. I think it's possible, but I'd be super surprised. What do you think, Matt?
Yeah, it's really hard to extrapolate how quickly Berlin and Austin are going to ramp up, but given the seemingly given kind of just the string of delays out of Berlin in particular, I'm kind of getting. I had been slightly more bullish than I am now, I would say. So I think when I went on Daly's channel, I had like 1.8 for the year, and I've thought about that a lot, and I think that's probably like the best we could hope for, with a pretty significant ramp out of both Berlin and Austin. So I kind of think 1.6, maybe, if things execute pretty well, 1.7 is more realistic. But Tesla can surprise. I mean, they clearly surprised in Q4. I'm like astonished at how many vehicles they delivered. So it's not outside the realm of possibility that they could surprise. Like 1.9 is, I guess, possible, but for where I am right now, I'd say I'd feel much higher degree of confidence around like 1.65, maybe 1.7.
Okay, that seems about middle of the road. Yeah, I mean, anything close to 2 million would be incredible, but yeah, I think that's 2023. I think they go over 2 million, but that's when Berlin and Austin are ramped up. Yeah. All right, next. Where do you see the Tesla valuation the next 5 to 7 years for just auto? Can we expect auto GM reaching 40% in this decade? What do you think, Matt?
Not investment advice. And clearly this is subject to a huge amount of uncertainty, but if we're getting to 5 to 7 years is a pretty long time frame. And in my view, they solve autonomy and are operating some sort of robotaxi fleet in that time frame, which has a massive valuation impact. So in that case, I would say north of $3,000, maybe closer to $5,000 per share. But that's contingent on them executing in that way. Can we expect automotive gross margins of 40% in this decade? Well, with autonomy, absolutely, that's possible. Without autonomy, so if you want to just like say that robotaxis aren't a thing and full self-driving take rate doesn't meaningfully change, I think it's highly unlikely that they'd get there. So I think it's really important to kind of bifurcate those sorts of projections to say, are you assuming X amount of progress on autonomy, and is full self-driving just a good like convenience feature that a certain percentage of people will pay for? If so, there's kind of like one threshold of what that does to valuation and gross margins. But then if they kind of change the whole economics of owning a vehicle by introducing like truly autonomous vehicles and start charging a platform fee, and full self-driving is $25,000 with like a 50% take rate, then like margins look nuts under that scenario. And to me, that there's a very credible path forward where they do that. And in that case, I think like 50% automotive gross margins in the long run might be reasonable. But that sounds crazy when you say it. So in my mind, it's still like so good it doesn't matter. Is the way I like to think about it.
Yeah.
I don't know. What do you think?
I mean, for just auto, I think we're in appropriate valuation territory where we are now. And I do think gross margin could certainly reach 40% this decade just on auto with their manufacturing efficiencies and the single casting and the battery 4680 line. So I do think they could reach 40% this decade for sure. And this is just auto, I think all the other stuff that's not auto is sort of like icing on the cake for the share price valuation from here in a lot of ways. So yeah, that's where I see it. I see someone in the comments saying that Hood has 10 billion of cash and 3 billion in debt. That's I'm pretty sure that's way wrong. I was looking at the balance sheets on Yahoo just now. But anyway, let's go to the next question here. From Tech Invest, what projections do you have for Tesla energy business, and how important do you think both 4680s are in terms of profitability for this segment? So for Tesla's energy business, how important? I think the 4680s are important for their auto business. I'm not sure they're going to use the 4680s for the energy business. I could be wrong. Maybe they're redesigning the mega packs to use 4680s too. Maybe we'll get more information on this product roadmap update. I have a feeling the 4680s are part of that. So yeah, I mean, do you think, Matt, that the Tesla energy business is going to use the 4680s, or are they just going to kind of use the 4680s mainly for auto, and then everything else will go redirected toward energy?
Yeah, I think the latter. Like 4680s, one of the huge advantages is kind of the energy density, which is not as important for stationary storage. I mean, for stationary storage, you care primarily about just cost per kilowatt hour. So, an LFP battery makes much more sense for a stationary storage application in my mind. So, I think they've been scaling up a lot of purchases of the iron batteries, especially in China, because that's a chemistry that they're using for the local market there. And to me, that kind of makes sense for stationary storage applications as well. So yeah, I like maybe eventually if they can get 4680s at such a crazy scale that it just makes sense to roll those into energy products as well, that could make sense. But like with this 40 gigawatt hours that they're building right now for stationary storage, I don't think that would use 4680s. To me, that's just an application that, like, a lot of the benefits of that in terms of like cell to pack and the energy density don't translate directly into a cost savings benefit on the energy side. So yeah, I think those will be different chemistries, and that's fine. You have to imagine all the existing cells that are going into the Model S and X eventually will probably be transitioned to like stationary storage applications rather than just like closing down those lines.
Yeah.
So yeah, we'll see. But to me, the exciting thing is that they're finally starting to dedicate some capacity to stationary storage, whereas before it was just kind of like whatever was they could spare from the automotive business, they just throw into some packs here and there, and do a project or two a quarter at a decent scale. So that's what I'm really excited about. I think you'll start to see like the beginning of like a growth trajectory like we've seen on the automotive side. I think we're going to start to see that on the stationary storage side. And I guess on the first part of that question too, they asked about projections on the energy business in general. I think that's not really going to move the needle until 2025 or later. And I've given my thoughts on that before, so I won't dwell into it too much. But this is just going to be this is the long game on the energy side. So I think it will be meaningful in like 10 years, but I don't think it's going to move the stock in the next 2-3 years.
All right, next question from Justin Netch. What odds would you put on a U.S. recession this year, and what is the best way to play it if you think one is likely? Well, definitely Elon Musk commented on this recently, saying he thinks the recession is likely this summer or next year or something. And he's a pretty smart guy, obviously, but I don't personally agree that it's likely. I just don't have enough data to make that know that anyone can really make that assessment with any kind of probable, likelihood. I don't know, is what I'm saying is, I don't know enough to put odds on it. I would say most years it's unlikely for a U.S. recession. If anything, I thought maybe last year there would have been one from COVID. But, I think a recession is GDP has to be in decline 2 quarters in a row. So that's how we're defining a recession, right? So I think for GDP to decline for 2 quarters in a row, I just don't see that happening this year. I don't know what would make that happen. There'd have to be a ton of unemployment, and it seems like the unemployment rate's kind of stabilized to some degree. I mean, there's going to be some inflation for the near term, but I just don't think it's going to happen. So I'm sort of disagreeing with Elon on that, I guess, which I don't often do. But if there was one likely, I don't know what the best way to play it would be. Just buy physical gold and put it under your mattress, maybe. I don't know. I don't know. Matt, what do you think? What do
You're
you
gonna
think
be a
the odds are?
prepper, doing like gold and canned goods in some bunker
Yeah,
somewhere.
maybe. Yeah, buy barrels of oil and bury it in my backyard and some physical gold bars. Yeah, yeah.
Yeah, I think it's unlikely as well. I mean, I'm willing to be wrong on this. So I'm always trying to reassess the situation, and you know I, I could see my thoughts on this being swayed as kind of more economic data comes in. But right now, I'd say like less than 20% odds of a recession this year. But I think we'll know a lot more as these earnings come out, like we were talking about earlier. I mean, the underlying financial performance of these firms is going to be a really good, in my mind, leading indicator of where the economy is going. So I'm curious to see how these earnings numbers look for all companies in Q4.
Yeah, let's see one more question, then we'll end it there. We're going on for an hour here. So, thoughts on ARK Invest significant trimming down of their Tesla position? Yeah, I've been noticing that, and it's still their largest position, I
No,
believe.
it's not actually. I think it's their number two.
Whoa, what's number one then now? Robinhood?
Um, no, it's not
No,
Robin
definitely
Hood.
not Robinhood. Definitely not. Just joking. Just joking.
I could look it up real quick.
All right, well, you look it up, but I'll do my initial thoughts. I thought that some of the trimming was because there's been a lot of maybe redemptions from ARK, people outflows from their ETFs, in the last, 12 months. I think there's been more outflows of ARK investment ETF than inflows, and so obviously they have to trim down almost everything, especially their largest positions. So I thought that was some amount of it, but I do think that they've been trimming down more than just that. It seems like, and they must be thinking that Tesla, as even if they have conviction in Tesla going up from here, they must think like, okay, Tesla might go up 2 or 3x in 5 years, but these other stocks can go up 5 or 10x in the next 3 years. So let's buy those instead. That's my thought on why they're trimming Tesla and going more on some of these other stocks. What did you see anything, Matt? If they have a
Yeah,
number,
so
like a
actually,
number one?
I guess I was wrong, at least with ARKK. Tesla still is number one. It's only at about an 8.25% weight.
Okay.
So, historically they've been at like, 10, 11, 12%. So
Yeah.
it's come down pretty significantly as a percentage basis. I think it might be, I was almost certain that I saw, at least in one of their funds, there was a new number one holding. So that might be the case, but, number two, at least in their, ARKK fund is Teladoc, and then Zoom is right there at 6.3% each. So they've certainly been re-rating Zoom and Teladoc at the expense of Tesla. So I mean,
Yeah.
clearly their viewpoint on that sort of reshuffling is that they think there's more upside potential from here with their kind of 5-year price target methodology that they use for those names
Yeah.
relative to what it had been for Tesla. So
Yeah.
I disagree, but they're more than welcome to
Yeah.
to that viewpoint.
Yeah. I mean, I think there's more upside potential with a lot of the other names, like in terms of their market cap going up X%, X times versus Tesla. But I think in our minds, with the risk, like the percent probability of Tesla going up, let's say 3x versus Teladoc going up, 6x, like they might be like thinking, oh, there's a 50% chance Teladoc goes up, 6x, but we think there's like 100% chance Tesla's going up 3x, but we think there's only like a 30% chance Teladoc goes up 6x. So obviously Tesla is the better pick in our mind, but maybe in ARK's mind, it's kind of on the edge, like, oh, Teladoc's, can go up 6x, even though it's not as likely for Tesla to go up 3x or whatever it is. But the probability weightings of the different scenarios make sense maybe in their mind to go heavier on some of these other names. So I can understand that.
Yeah. Yeah, in ARKW, actually Coinbase is the number one holding and Tesla's at number two.
Okay.
So that was
Yeah.
the one I was thinking of. Yeah, and
Okay.
they were buying that at the IPO at like, $300, $400 per share, like those first couple days.
Wow.
And now that's down to like 230 or something, but they've been
220.
adding
Yeah. Yeah. They've been
220. Okay.
adding. Yeah, so Coinbase is 47 billion market cap, 48, there's a lot of excitement around that IPO. I don't know. FTX seems like a big competitor that's kind of coming in there.
Yeah.
So Coinbase is a great service, like Robinhood, great service. I just don't like to the public in terms of getting crypto and Bitcoin and the Coinbase does have somewhat of an institutional foothold, I would say, for institutions to use as access to Bitcoin, for example. But I just don't know if it's like a competitive advantage they have that's going to be sustained over the next several years where it's worth this valuation. It's hard to say. Time
Yeah,
will tell.
I've had a thesis that there's a reasonable chance that they've got more staying power with their pricing than the market gives them credit for. If you look at the forward analyst expectations for earnings and revenue, they're projecting like a steady decline from here. So which is a reasonable assumption, given how high the transaction fees are, and you actually saw that trend a little bit in Q3. But in Q2, it did not happen. And so it wouldn't surprise me if there is some huge spike if Coinbase's margins have a little bit more staying power than expected in Q4. But given prices of crypto in Q4, I think it's unlikely that they'll see revenue growth in Q4. But like their margins are crazy. If you look at their financials, they're printing money. But the whole thesis is, at least I think the market consensus thesis is just that like they're at their all-time peak right now in terms of profitability, and they're going to have to kind of concede ground as their service becomes more commoditized. Which, if that's true, that's like not the kind of company you want to be invested for in the long term.
No.
So it's interesting. I'm going to be curious to watch that one play out over time, just as an observer, because it's so curious. I mean, it's such a divergent viewpoint on what ARK thinks is going to happen versus where all Wall Street thinks.
Yeah, and the thing is, ARK's not going to be right on everything. If they're right a few times, that makes up a lot more for just being wrong even more times. Because when they're right a lot. Like Tesla, obviously, and some other names. So, we give them a lot of respect. I know we talk about them a lot, and we talk about negative disagreement or just disagreements with whatever. But overall, in ARK Investments, incredible, legendary manager of money. The best institutional manager out there that I know of by far. They'll go down in history as one of the great all-time shops, I'd say. So kudos to ARK, and love what they're doing, and love that they open source the research. They've really done a lot. So
anyway, their views on macro have been great too. I've been listening to Kathy's got these interviews she does on Fridays, and she had a great commentary. I think it was this past Friday, just talking about how inventories built up, and that was relating to a lot of inflation pressure that people were seeing. Or inventories were low, and that was causing inflation just because there was not enough supply to meet the demand. But with all the economic data that they're diving into now, she's pointing out how inventory levels are building up, especially in the used car market, which is going to be bad news for the traditional OEMs, and but across other market segments as well, you're seeing this kind of normalization of inventory levels, which Kathy believes is going to really alleviate price pressure on inflation. So that like hearing her talk through that was incredibly convicting for me in terms of getting conviction that these inflation fears are a little bit overblown. And that there's more room to run for these growth stocks. So their work really is phenomenal, but we're not afraid to disagree from time to time on individual theses.
Yep, exactly. All right, guys. Well, great chatting. We'll end this. I think I clicked the button to try to record it for the first time on the Twitter Spaces version. So we'll see how that goes. But it's on our YouTube live channel recorded, and you guys can watch it anytime there. We'll be back next Tuesday for our live stream. Until then, see you.